Hey guys, good morning, good morning. Welcome back to another stream here. We're going to take a quick look at what's happening in the overall market right now. It seems pretty green, so I am excited. Like always, guys, we're going to just take a quick look. But if you guys have any questions, feel free to post on the comments. If you guys want to take a look at any stocks, also feel free to post them in the comments. Hopefully everybody's getting ready for a nice long weekend. Happy 4th of July weekend to everybody here in the United States. So I know I am ready to relax for some time. Even though the market will be closed on Monday, I'll probably still be releasing some videos. So let's just get everything started, guys. Hope everybody's having a good day. And give me one more second. Let me just set everything up. I am missing my phone, but it's actually no, it's back here. Like to keep track of things. So it's anybody what's happening, guys? So today we got the job report. Like I said, market seems to be liking it right now. What else do we have? In one more second. All right. So let's start off with. I saw a few of my companies actually trending. What's going on, Dr. Sim? Good morning. Good morning. All right. So let's take a quick look at the overall market right now. So what do we have? We have Dow is pretty much flat right now. Nasdaq is up 0.4%, and we have the S&P 500 up 0.3%. What time is it right now? 10:08. If we take a look at the maps, see what market is really being we can see, right, big tech is up right now. Microsoft up 1.23%. We have Apple up 1.06%. Google, Tesla is up 2.1%. Even the semiconductors are doing good today, right? So it's 1.6 on Avgo. Even Intel, right? Intel is up today. That's unfortunately AMD is down today. But we can see the overall market, especially the tech, is up right now. I wanted to take a quick look at just the overall portfolio. Today we have some impressive stuff, right? We have Cerence. This is one of my favorite companies. I don't know if many of you guys have been taking a look, but it's a tier 1 stock for me. Cerence is up 17.24%. This is a tier 1 stock. They did announce that they are entering into the mid-cap, the S&P mid-cap 400. So that's pretty big news. It usually just brings more institutions to be able to buy this company, right? As they get exposed into the market. So that's actually pretty impressive. I'm happy to see a 17% up on one of my biggest stocks. What else do we have? We have Space up 15% today. Space, they did announce that the chairman, right? Not the CEO. I always confuse him with the CEO. He's not the CEO. But the owner, Richard, right? Richard is gonna be flying soon into space. That whole space race with Bezos it's pretty crazy. How they are doing that. And then that one's up 15%. Then we have pretty much the overall market average is up around 2%. Zoom is up 2%. We have Datadog up 1.4%. We have Shopify up 1.4%. And we have some big players, right? Some big players here. Unity up 0.3%. There are some red right now. Nothing too crazy. It does seem the biggest red days, the biggest red companies in my portfolio. Good morning, Polly. Good morning. How's it going? Hope everybody's getting ready for the weekend, right? Does anybody have any plans for this upcoming weekend, especially here in the United States with 4th of July? Hopefully, some of you guys get to enjoy some good food, enjoy the pool, enjoy time with the family. So if anybody has any plans, feel free to share. So the biggest ones I see down right now are like Niu, Huya, right? We have PDD, JD. So it seems like the emerging market, international companies. What's going on, Shubham? My apologies if I am butchering the name. I'm sorry. Oh, hey, feel free to, guys, if you guys have any question, feel free to post on the comments. I'll gladly answer anything I can. And I'll let you know if I don't know the answer to it. But we can see, right, international companies are down. We see a nice rally up on tech US companies right now. So let's try to find out what happened. So let's go to CNBC real quick. Lee and Expev down in the dump, even though good quarter 2. So, Shubham, just like I mentioned, right? It does seem like right now, the overall emerging market, it is doing a lot better than it's taking a hit, right? So like I mentioned, right, we have Huya and Neo are down right now. Another thing, Shab, with Neo, a lot of these EV companies, a lot of these EV companies are I think investors, like with Neo, right? Yesterday, Neo presented their numbers and the stock was down about 3-4% yesterday. I know I did a quick video on them, and now it's actually down another 3%. It seems investors were just a little too excited about what they were going to present. So, Neo, for example, for the presentation, I think they gave for the full quarter, they did 21,900 vehicles. So they were within the range. I think investors were expecting them to beat that 22,000 that they had for the quarter. And I just don't understand. Sometimes investors just get a little too excited. And unfortunately, when they get too excited, there comes with that risk of a pull down. For me, and it happens to almost every stock. For me, for example, I believe right now investors are getting too excited in Nvidia. Again, none of this is risk. None of this is advice. It's just my overall opinion. I think right now investors, even though Nvidia is my number one position, I think right now investors are getting way too excited too quickly. So I potentially could see I potentially see a pull down coming from to Nvidia in the near term. Unfortunately, I don't know when that's gonna happen, and I don't know how much is gonna happen. But I do think very similar to what's happened to a lot of these EV stocks is happening to a lot of markets right now, just over excitement. So you want to see, how do you see the future for all these three, Neo, Lee, and XPEF? Should I hold? I'm up like 40 plus in all of those. So Shab, that's pretty much, I think I don't own any of those companies. I don't have too much in the EV market right now. But the first question I would ask is like, how much position do I have in these three companies? Let's say, do those three companies only have about 10% of your portfolio? And then try to work your way. Is 10% okay? Do I feel comfortable holding this? I think it's more of a you question. Like, do you feel comfortable holding those three companies? Are they too big? Too big right now? Maybe if they are too big, maybe you want to trim down a little bit. But I think it's different for every investor, because at the end of the day, a position could be good, but if you don't have your emotions intact, or if you get freaked out due to especially 35% of your portfolio on those three stocks, to me that's a lot, right? That is a lot. That is a lot. But like you mentioned, they in the last 3 or 4 months they have given you excellent returns. Maybe you say you might cash out. There's a few possibilities you can do, right? You can do nothing, right, and just let the portfolio continue to go its own way. And maybe, let's see, I don't know your style, but maybe if you invest every single week, instead of investing in those, you invest in other companies, and eventually that 35% becomes smaller and smaller percentage of your portfolio. Another thing you can do is, what you're thinking of doing is cashing out. I'm usually not a fan of cashing out. If I invested in a company, it's because I did my due diligence and I really understand the company, and I'm looking at it for the long term of things. So even though maybe in the past few days it might move down, it won't really affect my long term of things. The last thing you can do is trim small positions, right? Not maybe sell out, not sell out, but maybe sell to a position you feel comfortable in. Like you mentioned, maybe right now they're 35% of your portfolio within those three stocks. One thing you could do is drop them down to like 25, maybe 27, something that you feel more comfortable with. So again, none of that was advice. It's just there's always different ways around it. It's never just hold and buy. It's a little bit you can just hold and let, as you keep adding on, that becomes smaller position. You can sell out small position until you feel comfortable with those levels. Appreciate the support. It really does mean a lot. And again, I just try to go from experience from what I've done. Frankie G, don't panic sales. EV will be up next week. Relax. Exactly. So like Frankie, I mean, like I mentioned here with Nvidia. Nvidia is my number one stock. If this stock drops for example, for like 2-3 months, if it continues to drop, I pretty much wouldn't sell. But that's because my overall conviction on this stock is off the roof. Unless something fundamentally changes, even if the stock price drops down, not selling my position. JG, that's good advice there. Invest in others to bring it down percentage way. Yep, that's what I do a lot, JG. So right now, right, Nvidia, because Nvidia is the perfect example for that. Right now, I think Nvidia is about 11%, maybe 10% of my portfolio. Even though it is my favorite stock, 11% is getting kind of big. So I invest weekly in stocks. Every week I put into the market. So right now that I know Nvidia is pretty big, I'm not selling it, but I'm gonna not add to it until that exposure, as my portfolio grows, it becomes smaller and smaller and something more tolerable. Eventually, what could happen, Nvidia might become smaller and smaller, and I might start adding back on. So that's how I play it. And again, there's so many different styles. So let's see what else. What's happening? Nothing is really down. I think my portfolio is gonna have a really good day, mainly because of these two guys, Space and Sorens. Right, Space is up 15%. Sorens is up about 16%. So these two companies, Sorens is one of my top 5 holdings. So this is gonna definitely move my portfolio. So that's why, even though you guys might look like, Jose, you have so many stocks in your portfolio. I think I have about 40 stocks in my portfolio. But I do believe in convictions. My top 10 stocks, I think, make more than 50% of my portfolio. Some of my stocks only make up less than 1%. So I don't mind having a lot of positions, but at the same time, I do different conviction sizes, different weights. Shub, don't you think Space is a meme stock? So I don't know if I would consider it a meme stock. It's definitely kind of gotten that meme name. But to me, Space is one of those stocks I would consider, if you guys have been watching my channel, it's one I would consider a speculative play. Speculative plays to me are companies that are pre-revenue, right? They are not making money right now, so they still have a ways to go before making any money. So that automatically goes into speculative plays. There's a lot of EV stocks, for example, right now that I would consider speculative plays. The ones that are not making vehicles, right? Those are ones I would consider speculative play. They are in early stages, so I know the risk is higher. I wouldn't consider that meme. I just would consider those a little more risky. And for those reasons, I only open up small position. Space, though, I mean, I got into Space at $17. I think that's my average cost. It actually might be lower than that. It might be even $14. So I've been in Space since, I want to December of 2019 or January of 2020. So I've had this stock for a long time. Yep. So agree. Speculative plays means higher risk and higher volatility as well. I don't see many of my companies see these types of movement that Space has done. But at the same time, I'm in it for the long term of things. So I was happy when Space was up here. I wasn't that sad when Space was down here. Now I'm happy again. It's such a small position in my portfolio that when this happens, it doesn't really affect much. But when something like this continues to happen, it's gonna really give me some big winners. Sorry guys, let me take a quick drink. And we have some stocks you guys want to take a look at. So JG wants to look at Trade Desk. So I've done a few videos on Trade Desk. I do enjoy it. One thing I do want to say, very similar to apps, so is that I wonder why the overall advertisement is pretty popular today. Henry, who wants to take a look at apps, we can take a look at both those companies. I enjoy both of them, right? I think right now my main play on advertisement is Roku and then Magnite. But I definitely wouldn't mind adding on to Trade Desk and apps. But we can take a quick look at those fundamentals. I just want to see what's happening in the overall market real quick. So this is no, we were just talking about EV cars, EV vehicles, and this is to be expected, right? So maybe some of you guys might have seen this, and this is Ford's June sales declined by 26.9% as company misses second quarter expectations. And I don't get this, right? Ford itself, on their most recent earnings, and it's different, right? Ford compared to upcoming EV companies, they have that strong demand right now because they are producing. They just are meeting the demands. Ford, on the other hand, already has a huge demand, and they're kind of been stalemate. So for them, they have been seeing a decline due to this semiconductor shortage. And they've actually mentioned this on their last earnings that they were expected to lose a good portion in this second quarter due to the semiconductor shortage. So I don't know why. Sometimes I hate articles just because they kind of try to add fear to stocks, even though most of this was already known. What's going on, Angus? Well, hope you guys, hope everybody here is having a good day. And while you're here, guys, make sure to hit the thumbs up. It helps so much with the overall channel. It really, if there's one way you guys can support it, is with the thumbs up. So US adds 850,000 jobs in June, better than expected. The overall estimate was 706,000. The unemployment rate unexpectedly rose 5.9% versus the 5.6%. All right. I'll probably do a video on this later on. I have around 13K of what's going on, Shub. I have around 13K available and want to invest in high growth stocks like Tesla and not space. So yeah, so see there's Shub. I'm sorry if I keep mis butchering the name. I tend to keep stocks in different type of criteria or categories, right? For example, my most risky stocks are the ones I call speculative plays. Those are companies that are in markets I believe are going to grow dramatically in the next 5 to 10 years, but at the moment are not really making revenue, right? So don't SB. All right, I'll call you SB. So those are the ones super small, something like space, right? Something a company that I can see grow in the future, but right now not gonna do much, and it's just gonna be very volatile. Then I have companies that I would consider growth stocks. Like you mentioned, Tesla, right? Tesla is a company that's growing at crazy levels. They're already selling vehicles, but their market is still expanding at crazy levels. Normally with those, then I have what I call like value growth. And these are like the big companies already that have already making a lot of money. They're already super positive in cash flow from operations. And for example, like Google, like Facebook, right? Those are companies that are already making a lot of money, but they're still growing at some decent level. So those are the three types in my portfolio. So right now you have around 13K available and want to invest in high growth stocks like Tesla and not like space. First thing I want to say, if you have 13K, there has been some studies that show that dollar cost averaging is a better method around it. So within that 13K, again, not advice, but just what I've read. Don't put all that 13K at once. Even sometimes it might be good to do like 1K every 2 weeks and so on, because due to dollar cost averaging, some days you might buy high, some days you might buy low. I'll have to find SB. I'll have to find that reading, and I'll probably post it. If you ever post, I'll actually post on one of my YouTube comments, and I'll probably reply to it. So another thing, if you don't know what stocks are fine, there are plenty of growth ETFs. I think ETFs are really strong. Some of my favorite ETFs would probably have to be like ARK's ETF. You don't always have to go with individual stocks. ETFs, I think, are better for someone who doesn't want to focus too much in looking at stocks. So we have ARK. This one's pretty cool. Then we have one that we kind of talked about yesterday. Rizfiz, one of our members, he kind of mentioned that Meta ETF. So I don't know how familiar you guys are with Roundhill. So Roundhill, they own a lot of cool ETFs. They have an ETF for esports, which they call Nerds. So this is an ETF I personally would like. Bets ETF. This is an ETF on sports betting. They have Subs ETF if you wanna have companies in the streaming market. There's Subs. MVP, which is I think more just boardings. This is one I don't enjoy too much, or the deep value. But this one is new, the Meta ETF. This is one that Rizfish showed us yesterday. And I really do like the positions they own. I want to say if there was an ETF that was closest to my portfolio, it would be this one. It would be Meta ETF. Even though I don't have like Roblox, I don't have TSM. But look at them: 8% Nvidia, 5% Roblox, 4.4% Tencent, 4.4% Microsoft. They have Fastly, TSM, Autodesk, Unity, AMD, and Qualcomm. So these are companies in what they call the metaverse. But overall, I do believe this is a huge growth market. And I really do enjoy this. Like I said, this is probably the closest ETF to my portfolio, if there was one. Especially with Nvidia being such a big. I used to think it was ARK, but ARK invests in some companies. I'm not too heavily into them. So if you are in ARK and want to get a little bit more in another type of growth market, this ETF is actually pretty cool. Again, not advice. Another one that is pretty cool is QQM ETF. So this is QQM. If you guys are not familiar, Invesco's, they have a multiple of. So this. They have QQM and I think it's QQJ as well. So this is 100, with fully vested, blah, blah, blah. The index includes 100 of the largest domestic and international non-financial companies listed on the NASDAQ. So let's take a look at their portfolio. So here, actually, no, it's not QQM. This one is pretty big. This is just holding the big ones like Apple, like Microsoft. There is another one they have, I think is QQJ. Give me 1 second, guys. So QQK, the next gen ETF. So this is more like also another growth style ETF, Invesco Nasdaq Next Gen 100 ETF. So this focuses, I think, mainly on mid caps. Let me zoom in for you guys. So this focuses in the 101 and the 200th largest companies on Nasdaq. These are normally like the mid cap companies. So here you won't have your Apple, right? You'll have it in the other one, in the QQM. But here you'll have your Roku, you have CrowdStrike, you have Trade Desk. So shoot, these ETF, this one, the QQM, the QQJ, this just recently started. I think they were their inception date was this year, or inception date actually 10 months ago, it seems. So there's not much here. And this one's more of a growth stock, right? More growth stocks, but a little bit diversifying everything, right? You have your Trade Desk, you have your C-Scaler, you have your Garmin, you have your Viacom. So this is pretty cool for the mid cap kind of growth market, and you get a little bit of everything: the IT, the healthcare, communication, consumer, industrials. So this one, yes, SB, this one is brand new. This one is not even a year old. They just take the, you know how the Qs have X amount of position. These takes the 101 and 200 position on it. Meta is also pretty new. Meta, I think its inception day was 2 days ago. It was June 30th or June 29th. So these are pretty new. Then you have your ARK, right? But overall, the market that they're trying to hit, if I wasn't invested in companies, these would be the three I would really look at: ARK, Roundhill, and Invesco's QQs, their QQQ products. Meta's pretty new. Yeah, that one's 2 days old. But Roundhill as a whole is pretty, is good. I've looked, I've done like their nerds. Their nerds have Nerd ETF has been there for a long time. I think this was probably one of their oldest ones. Let's see their inception here. I don't know if they have it here. Inception date was 2019. So this is more innovative, but not as crazy as ARK, in my opinion. Jesus, what's going on, Jesus? Jose, I'm cashing out of Nvidia. I think it's too high for now. What companies do you think are cheap right now? Or what are you putting your money in this week? So 3 stocks I purchased this week, right? I obviously, not advice, but the ones I purchased this week, I actually only purchased 2. I purchased Melly, and I purchased, damn, what was the other one? It was Melly and, let me just quickly see. And Tattoo Chef. So those are the 2 companies I purchased this week, Melly and Tattoo Chef. At the moment, though, At the moment, Jesus, though, I don't know. I don't really see anything in my mind that is super, super cheap, right? I think today, though, Jesus, today I am doing, I don't know if you guys saw it last week. Last week I did, I started these new videos, which are called weekly market updates. So weekly market updates, what I talk about in these videos are just the overall market, and I take a look at ETFs in specific markets. So I do believe right now, for example, I took a look at actually I can pull it up. So today I am gonna do it. So I look at ETFs, and most of the ETFs I follow are in individual market specific. So like APS is in clean energy. What I am gonna do today, after the market closes, I'm gonna take a look at these ETFs and see which markets I believe are a bit undervalued compared to the overall market. Because I think, for example, W Cloud, this is the software ETF, very overextended. So I believe right now the software market is a bit overextended. I at the moment I wouldn't want to purchase too much in the clouding world. But then I saw, for example, I do believe the gaming market, Nerd, for example, is one we just saw. Nerd is mainly on gaming stocks. This market does not seem to be overextended. So right now, I'm really trying to look for more gaming stocks to add right now, while I believe they are undervalued compared to the overall market. So Jesus, I am going to take a look at that later today after the market closes, to just give more insight of how I feel this upcoming week will do. And then tomorrow on Saturday, Jesus, I also take a look at the 3 stocks I'm planning on adding this upcoming week. I usually wait for the market to close before I do those 2 things. So you should definitely check out that video today, and then the video tomorrow where I talk about the stocks. I don't know what stocks I'm going to see, but I do believe they're going to be in the gaming market as well. Another market I believe is a bit undervalued right now, or undervalued compared to the rest of the market, is the emerging market. This is EMQQ, right? This is mainly internet and e-commerce ETFs. ETFs in international internet and e-commerce. I believe this market seems to be undervalued at the moment right now. So Shub, do I release your investments profile anywhere? Yes, on my Discord channel. Let me get that for you. So if you go on my Discord channel, it's not lively updated. I try to post it as much as I can, but I do update when I buy and sell a stock. So every week I only put a few $100s into the market, right, Shub? Right now my portfolio is luckily sitting at a little bit over, it just crossed the 6-digit line, so I'm super excited and super grateful for that. And at the same time, it's just I add only a few $100s a week. So even small amounts of increments can really help grow your portfolio. And here, if you join that Discord channel, you're gonna see something that says accounts update, and you're gonna see overall accounts. So here you can see this. You can see my overall portfolio. This was updated a few weeks ago. So at that moment it was 117. Luckily now the market has been a lot higher, and it's sitting at higher values than that already. I think since I've added this, it's already grown about 6-7 K, and that's just how amazing the growth market is at right now. At the same time, I know volatility, but you can see like my biggest positions own a good portion of my portfolio. That's Nvidia, C Limited, Unity, Sorens, and AMD. That's about 40, maybe about 40K of my portfolio. And then I have a lot of small companies that are just small percentage. So that's my investment style. I don't update it too much, but I do update what I buy and what I sell on there. So Shabab, and yep, feel free. We have a lot of great investors there, but it doesn't return the year over year, right? No, it doesn't. I used to do monthly updates, Shub. I think I am gonna do quarterly updates now instead of yearly updates. So the quarter just ended yesterday, right? June 30th. Was June 30th? No, we're in July 2nd. So it just ended 2 days ago. I'll probably do a video this upcoming weekend on my portfolio, a quick update, and just show returns on it as well. Again, at the same time, my investment style might not be the best way, but it's the best way for me. And I think that's what every investor should really look into. It's more of what style works for me. Maybe some people don't like having 11-10% on Nvidia. This is too much for them, or have only like 2% in Tesla. So everybody has their own investment styles. And give me one quick second, guys. Let me just say goodbye to my wife. She's heading out real quick. All right, sorry about that, guys. Yeah, I think so. I think that's the best thing, right? So, Shoop, SB, you have, I think you have the right mentality. I look at a lot of different investors as well. Any way to contribute to your Patreon or anything like that? Here you can do on, obviously, I'll be grateful. The best ways right now, SB, are I do have like a membership support level on YouTube. So here you should see like join, and it's like there's like a $1.99 membership, and there's like a $4.99 membership, where it's just a support level for you for me. Another thing here on chats, I think you should be able to give. Actually, you can't. Give me 1 second, guys. Sorry. Do. And I think here on chat, you should also be able to somehow send funds. I don't know if, oh, thank you SB for the support. It really does mean a lot. And sorry, you guys shouldn't have been able to see that or that, but that's okay. I mean, I don't make much money from YouTube, but it's more than enough. So let's see, what else were we talking about? So yeah, I think you had the right mentality, SB, where I personally just look at other investors, not to copy their style, but more to just learn of upcoming companies. And I think that's what you're trying to do. So definitely that's great mentality in the investment world. I don't follow any investors, but I try to learn from them. So let's see what else we have here. Anybody have any stocks they want to take a look at? I think we mentioned apps and TTD, but if anybody has any other stocks, feel free to post on the comments. So let's take a look at Trade Desk. So TTD. So first thing I want to say with Trade Desk is the stock does seem to be a bit overextended right now. Right, it doesn't seem to. That's not necessarily a bad thing, right? I just believe when the stock is overextended from its moving averages, it means that that there is a higher chance of seeing a pull down. That's what we're seeing with Trade Desk. I'm pretty sure we're gonna see the same with apps. Apps is probably not as overextended as Trade Desk. So apps right now, it's down about. It's not that overextended compared to Trade Desk, but I do believe there is some risk of it seeing a pull down. We have had that excitement of Trade Desk, right? They kind of recently did a split here in June 17th. So since then, there has been a lot of excitement for the stock. I do believe that kind of excitement kind of increases the risk in the short term of things. In the long term of things, let's take a quick look at fundamentals. So let's start off with TTD. So TTD, for those that don't know, they operate as a technology. They're more of like what you call your ad tech company, right? So future growth. This is expected to grow at crazy levels, 23.8% on average for the next 3 or 5 years. So super impressive. They are profitable in earnings, and they're also positive in cash flow from operations. So fundamentally, they are in a great place. If you take a look at their debt, and they have plenty of cash, $680 million in cash, and no debt to their name. So fundamentally, they are looking pretty strong. I can understand why investors are happy. I want to take a quick look at insiders. So Jeffrey Green, the CEO and founder, owns about 9.3% of this business. And this is a company with about 36.6 billion market cap. I want to take a quick look at their financial metrics, right? We saw technicals looked a little bit overextended, but maybe the financial metrics might be something else. So here I'm taking a look at forward price to sales ratio, and I'm taking a look at forward EV to EBITDA ratio. So let's do panels per financial metric. And let's just open this in new image so we can see. So trade desk right now, forward price to sales ratio is 25.2. I think I can actually go a little bit more in time. Let's go to January of 2020 and get some more information. So let's open this. So right now it's sitting at 25.12 here for forward price to sales ratio. It is cheaper than where it's been in late of 2020 and most of 2021, but it's still a bit overextended from where it was in early 2020. So that doesn't mean there is a pullback, but right now it does show that it's a little bit overvalued compared to its historical numbers, not compared to where the market is, more to just its historical numbers. If we take a look at EV to EBITDA, the story is pretty much the same. It's cheaper than it was in the late of 2020. It might be a little bit expensive compared to, I want to say, early 2020, and it's currently sitting at levels of summer and fall of 2020. So again, not completely overextended, but there is a little bit, it's a little bit more expensive than it was on 2020. So that's what we have on trade desk. Let's take a look at apps now. This apps have a different situation. So hopefully you guys are still here who requested these two stocks. So apps is also in the and we'll take a look Holly at FLGT. And then we'll also take a look at STEM. So this is right now, oops, this is still trade desk. So apps right now is super small market cap, also in the ad tech world, $7.3 billion. Future growth, this is expected to grow. It is profitable, and it is also positive in cash flow from operations. So again, strong fundamentals. Excuse me, guys. It's expected to grow 31.5% on average for the next 3 to 5 years. So also strong growth. If we take a look at their financial health, they have about $30 million in cash and about $14 million in debt. So fundamentally, I do wish their balance sheet was a little bit stronger. I wish they had a little bit more cash, a little bit less debt. Even no debt would have been perfect, but they're able to cover it, especially since they're profitable in earnings and they're positive in cash flow from operations. If we take a look at ownership, right now, I want to see if insiders own the good portion, but they don't. So we saw overall price was overextended a bit, not as bad as trade desk. Right, you can see, I do believe at these portions is a better time to buy. Overextension doesn't prevent me from buying, right? If a stock is overextended, I don't not buy it. I just buy smaller positions on it. If we take a look at financial metrics, what do we see? First, digital apps forward price to sales ratio a lot more expensive than it was almost all of 2020. Actually, yep, that's definitely the case. And then when we take a look at EV to EBITDA shows a whole different story. They're making a lot more earnings before interest and interest, taxes, depreciation, and amortization compared to previously. So these values are actually levels seen in late 2020. So overall, apps doesn't seem too overextended in technicals compared to trade desk, and it also doesn't seem overextended in both. One of them seems a bit overextended here in forward price to sales ratio. In EV to EBITDA, it doesn't seem half bad. So like a one-to-one here. So apps doesn't seem bad. The only thing is apps is also a smaller company, and I wish their balance sheet was a lot stronger. So those are my thoughts on apps. Fundamentally, definitely pretty cool. So Holly, and we have Colton here who wants to take a look at STEM. Holly wants to look at F. And guys, if I provided some form of value, make sure to hit the thumbs up. If there's one way to support the channel, and I mean this, a thumbs up goes a long way. And if you guys ever see one of my channels, one of my videos, post hi, just say hi, say something in the comments. And it improves the channel so much more, and that's more than I can ask. So what do you think about JT? CK, we can take a look at that one too. Again, remember, none of this is advice, and it's just my overall thoughts. So let's look at FLGT. So this is Fulgent Genomics Genetics Inc. So first thing I would say, Holly, this is not a market. I usually, if it's in the genetics, this is I'm guessing like biotech or biopharmaceutical, biomedical. This is a market I normally don't invest in, but I'm gonna try to give you what I see, right? So first, in form of stock price, not overextended, not extended at all. It's kind of sitting near its moving averages. It means to me, it means a good portion of the risk has been eliminated, but obviously the stock price can continue to go down. I just believe that a good chance it's higher. That risk has kind of gone down. So let's take a look at fundamentals. So together provide COVID-19 testing and genetic testing services to physicians with clinically actionable diagnostic information. So future, I guess since it seems like the main market, from what I read, it seems to be very COVID influenced. They do expect strong growth in the next right now, right? But it's expected to go down. So they are profitable in earnings, and they are super positive in cash flow from operations. What is the market cap here? Market cap is $2.5 billion. Now, if we take a look at their growth is a little bit weird and not easy for analysts to really track, because it seems like right now they have really done well because of COVID. The real question is gonna be, Holly, how are they gonna progress after COVID? Like what is their market? Is their market something that can expand from there? Financially, they should have a very strong balance sheet, and they do. They have $409 million in cash and short-term investments. That's actually pretty impressive considering this company has a market cap of, what was it, 2 point something billion. They barely have no debt. So fundamentally, I want to say, Holly, it looks great in form of metrics, value of technicals. It also doesn't look bad. The real question here, Holly, is going to be how holistic. My bad. I don't know why I keep calling you Holly. Holistic. The real question is, how is this business going to progress after COVID-19? And I think that's what investors are kind of really speculating. I'm guessing here, right? This is during the vaccinations. Growth stocks took a big hit, but I'm guessing because this was kind of really a company with COVID in its, like, helping it out, it took that big dive. I don't know if it would ever go back to those prices. There's always the possibility in the market. But I think now, as we have vaccines rolling out, it might be a little more quiet, but still can provide good returns if they have a future plan post-COVID. So hopefully that helped out, Holly. Holistic. Colton, hopefully you still here. Let's take a look. We'll take a look at STEM. So STEM, right? This is, I feel, is this a semiconductor company? Let me first find out about it. But first, in terms of technicals, this is a stock that is definitely a bit overextended. Right? It seems to be a SPAC. It seems to have been a SPAC. Am I correct? This is still a SPAC, Colton. Because look, it's starting around that $10. That usually kind of gives me that, hey, it might have been a SPAC or might still be a SPAC. But first, in form of price movements, it does seem a bit overextended. I don't think, obviously, right, that doesn't mean the stock price can't continue to go up. I just believe the risk of seeing a pull down might go down. There's a higher chance of seeing a pull down. Only thing, it's not a guaranteed, just a higher risk. Let's see if Simply Wall Street has something for us. So STEM operates as an energy. It was a SPAC, energy storage. Okay, it was. So now the conversion has happened, Colton. Let's take a look. So right now, market cap of $5 billion. It shows there's probably not too much information on the company. Actually there is. So this is a huge growth company, expected to grow 46.8% on average for the next 3 to 5 years. The reason, right, this is a company that's barely making any money right now, right? In March, let's see, for December 20, they're expected to make $150 million a year. This is a company with a market cap of $5 billion. So this is, I want to say, very early stages in its business. Other things we're seeing is the company is not profitable, and this is not positive in cash flow from operation. SB, if you are still here, this is something I would consider a speculative play. Right, SB? Speculative plays aren't necessarily a negative thing. Risk isn't a negative thing. It's just understanding that risk. This is one that I believe has a little more risk to it because it's not profitable. It's not positive in cash flow from operations. It's still in a brand new market. And the way I can tell it's in a brand new market is it has low revenues right now. And this revenue is expected to grow at crazy levels within the years. So this is a company, if it was to ever enter my portfolio, it would be a very small position. If it and another thing, I want this company to have a very very strong financial health. So right now it doesn't seem like it. They have about $200 million in debt, and they have almost no cash to their name, about 9 million. I am gonna take a right now. This seems scary, but I am gonna take a shoot at the dark and say in the dark. I guess is the saying. I forget what's the saying, but I'm saying that this balance sheet is pre-SPAC merger. And it is. I want to say this was March 30th. So if the SPAC merger happened afterwards, usually with the SPAC merger, the company gets a nice amount of cash, and they usually build up that cash position and sell out that debt. So Carlton, that's something I would definitely want to check out, because right now this balance sheet looks pretty scary. But if the merger happened after March 30th, then this balance sheet makes no sense, and it's because they already built up a nice amount of cash for the upcoming quarter due to the SPAC. But if it happened before March 30th, this is not a balance sheet I would like to see. Overall, this is something I would consider a speculative play. If it was in my portfolio, I'm just not too heavy in the energy market right now. It would be a small position. So hopefully that helped out. And CK, what's going on, CK? Hopefully you're still here. You want to take a look at JD. Again, not advised, just my overall thoughts. So JD, for those that are not familiar, is a Chinese e-commerce company. But many people, I feel many people don't understand how innovative this company is. This is one that is already pushing drone deliveries. They're doing robot deliveries, right? They have little robots driving around delivering for them, and they're innovating in the augmented reality marketplace. They're doing ads in AR to really. If you have makeup, let's say you want to buy makeup, you can actually use augmented reality, your camera from Air, and try the makeup on you before even purchasing. And they have stuff for shoes. So overall, this is definitely a pretty innovative market. I want to say right now the stock price is not overextended at all. I really like it at these prices, CK. I think I purchased it a few weeks ago, and I've recently done videos on them, CK. So definitely check out Jose Najarro. I want to say one of these. If you go to my weekly buys, I want to say one of these was JD. Was it this one? Nope, it wasn't this one. Was it this one? Yes. So on June 12th, I one of the 4 stocks I was buying on June 12th. I don't buy all 4. I usually buy at least 2 of them though. JD I think was one of them. And I do a nice video breakdown here on this video. I am gonna post it here. CK, this would give you a little more breakdown of my thoughts on JD. If you want, you can watch the whole video and just see my overall process. But I think, is it the first company I talk about? Nope, it might be the third. It was the second, actually. So yep, around 4 minutes is when you should start watching it. And it shows you my overall thoughts. I still like JD at these prices for sure. I don't think the stock is overextended. I do believe the emerging market is giving investors a bit of a buying opportunity right now. SB, my thoughts on Robinhood IPO. Unfortunately, I haven't looked at the numbers yet, SB, so no real opinion on it. Maybe something I might work on it this weekend. Depends on what my wife actually has planned for us for this weekend. I don't think I have any plans right now. And yeah, it's definitely a 3-minute video, but in that 3-minute section, I do a lot of my thoughts on it and why I am purchasing. I do like JD at these levels. So guys, outside of any stocks, is there any questions you guys have before I jet out? Feel free, and guys, make sure to hit the thumbs up. It really does help with the overall channel. I appreciate the support everybody here gives me. SB, I appreciate you joining the members. It means a lot. It helps so much with being able to hopefully do this full time eventually. So thank you, SB. It means a lot. And guys, if you can, make sure to hit that thumbs up. Joel, let's see. Joel. All right, I'll do it for you real quick, Joel. You better have hit that thumbs up, Joel. If not, I'll be a bit. So Pubmatic, I think this is also in the ad tech market. You are from India. Wow, thanks for the support, man. I really do appreciate it. And Anybody else here outside of the United States? I always love to hear seeing viewers from. It's insane. Like being able to talk to different investors from all over the world has probably been my favorite thing about starting this YouTube channel, and just talking about stocks. But so if anybody else is international, or what other states, if you guys are here in the United States, I am in Jersey, East Coast right now. Pretty much been here my whole life. So Pamatic, right? Stock is not overextended. So I do believe it's a good portion of the risk has been eliminated, right? Joe, if we take a look at fundamentals, obviously the stock price can continue to go down. But if we take a look at fundamentals, what do we see? First, $1.8 billion. Colombia, Jesus. Wow, nice. Nice down south, right? Where's Colombia at? It's in South America. Okay, just making sure. Just making sure. Numbers is my forefront, not geographics. So $1.8 billion, right? Market cap. Pretty small company. They are also in the ad tech, right, Joel? Right now, they are profitable and they are positive in cash flow from operations. So that's super, super strong. So fundamentally, they're looking good. 18.8% growth for the next 3 to 5 years. Again, I'm not looking at the market right now. I'm just looking at their fundamentals. Now, what I would say is after seeing, oh, good, okay, their fundamentals do look good. It's time to go look at their markets and see if that's a market we really expect to grow dramatically. Excuse me, guys. If we take a look at their balance sheet, they have plenty of cash and no debt to their name. So Joel, fundamentally, they look pretty good. Let's take a quick look. And in forms of technicals, they didn't look too bad either. Let's take a look at valuation metrics. Price to sales ratio is, there's not too much information. Is this a recent new company? Might be super small. Excuse me. So there's not much information. 2021 was obviously a high year for most stocks, so it seems to be on average from there. I'm guessing it's a lot more expensive than it was on 2020 in forms of valuation metrics. So this is definitely a small company. Yeah, we can see it's brand new, really brand new. So not too much information. At least it is profitable. It is positive in cash flow from operations and a strong balance sheet. So fundamentally, they do look good. Technically, they don't look too bad either. Now it's more, Joel, is try to understand the market, and is that a market that you believe is going to grow in the upcoming years? So guys, that's it for today's episode. I appreciate the support. I hope everybody has a good weekend. I'll see you guys on Monday. Even though the market is closed, I might still stream, and we can just take a look at stocks and take a look at any news that happened over the weekend. I hope everybody has a great time with their families. If you are here in the United States, USA, I don't know if you guys can see, but happy 4th of July, and take care, guys. See you next time. Now I just got to hit the end.